And welcome. This is Mary Ellen McGonagle here with your weekly MEM Edge show, the show where we bring you where the action is in the broader markets. Quite an ending to the week. We broke our uptrending spell here. We'll get into all of that and much more. Let's take a look at the topics today that we're going to be reviewing. As always, let's see where we closed the week. We're going to look at the broader market indices and beyond. Also, some of the top headline news that drove price action this week. We did see defensive areas outperform. I am going to dig more into that and share a couple of names that are looking quite attractive here. Also, inverse ETFs, and I did just complete a live trading room over at Simpler Trading, and we did get some questions on those inverse ETFs, and I thought I would share with you what to be on the lookout for that if we do see a further potential sell-off in the broader markets. Also, we're going to take a look at Buffett's surprising play and what that did to other stocks in the area where he did take or apply to take a 50% position in a particular company. So let's take a look at some of those headline news from this past week. We did see industrial production rise pretty sharply in July. That was at the beginning of the week, but not a whole lot of response. Investors were on the prowl for that Wednesday Fed notes. We'll get into that too. We did see retail sales come in flat for July. However, if you do take out gas sales, there was growth in that retail sales. So a little bit of a boost to those retailers. Also, earnings reports gave the retail group a boost as well. We'll see where we close the week. And then Fed meeting notes. This was on Wednesday, very closely watched. It was from their most recent meeting. However, comments from Fed Chair Powell were closely examined, and it was that investors took good news from it, citing that there was less aggressive talk. The Fed did state that they would take their foot off the accelerator if we did see inflation cool, but that remains to be seen, of course. And then weekly jobless claims, they did fall slightly, so not a big response there. However, next week is a very big week. We are going to get manufacturing PMI, that's an inflation indicator, durable goods numbers. Big number here is going to be the second quarter GDP. This is the second estimate. The first estimate showed negative, and that does put us in a position of its two successive negative GDP quarters, which is one of many definitions for a possible recession. That's going to be closely watched. Also, core PCE, that's another highly watched inflationary metric. That's due out next week as well. So lots of potentially impactful news next week. So keep your seatbelt on for that. So let's go ahead and get right into these broader markets, see where we did close the week. So here we are with the daily price chart of the S&P 500. And we can see the markets did pull back after getting right up to that 200-day simple moving average. And I've been on the lookout for a move above that to give us a good sense that this rally could continue. So we are pulling back on that. And let's take a look at the momentum indicators here. The RSI still up here in positive territory, trending a little bit negatively, but we are still good there. Stochastics up above that 50. So both of our momentum indicators remain positive. However, we did get that stalling action here at that 200-day simple moving average. And then of note today, the pullback did come on the heels of the expiration of monthly options, and a lot of eyes on today's price action because there was a sense that the derivatives markets, the options, were a part of why we've seen this nice rally. So with the expiration of those options, we will certainly get a better sense into next week whether that will cause the markets to falter a little bit more. Let's take a look at the S&P sectors, those 11 sectors underlying. I've gone ahead and added a relative strength indicator. This is a 2-month daily price chart view, and it's really helpful. It's something that you can do very regularly, and it's most helpful for spotting potential sector rotation. So up here on this upper left quartile are your stronger ETFs, your stronger underlying sectors, and then the lower right side is your weaker. And I did talk about the sense and certainly the realness that defensive areas are up here in the forefront. Here we are with utilities, consumer staples, and then also we can see that energy is up here in the forefront, and I will share with you the reasoning there. Industrials really are hanging in quite well. Last week, they were down not quite as much as the broader markets. We're seeing a lot of strength in here. These industrial companies coming out with very strong earnings. So that is an area of strength, but we do want us to pay attention equally to areas of weakness. And we can look at the basic materials. It's not terribly weak, but it did pull back. I'll share with you one of the reasons for that. And then also you want to be aware of the communication services. That's XLC, internet related. We did have a sharp pullback in Meta. That's a heavy weighting. And then Google Alphabet pulled back more than the broader markets as well. Technology down here languishing a bit, and I'll share with you in this next segment why and where the weakness is there. So let's go ahead from there. Take a look at some of these ETFs, and I find this to be super powerful and helpful, again, as far as getting your arms around where that relative outperformance is. And the purpose of that is you want to be able to participate in that outperformance. And then also, what is the market telling you? We are seeing defensive areas move up into the forefront. Some of these higher growth areas are pulling back a bit. And I will share with you why by using these ETFs. These are all clues to what is taking place within the markets, again, with an eye toward helping you outperform the market. So let's go ahead and take a look first up here. The US dollar had a very significant move. This was an add-on to last week's downtrend reversal. And the significance here is that with a rising dollar, you will see, in some cases, most cases, the commodity prices will decline. And I don't have it here, but we can take a look at gold as we move forward. That would be one particular area. But let's take a look at some of these other areas up here in the forefront. We want to see, and we are seeing, the broader market indices remaining up here. But I will tell you, small cap stocks were down the most among the broader market indices. And this is important because we did get that nice uptick above this 200-day simple moving average earlier in the week, and it has faltered. The small cap stocks are down about 3%. That can indicate a risk-off environment as investors seek the safer haven of more defensive and larger cap names. But let's move on from here, because I did want to point out to you the fact that the yield on the 10-year Treasury is on the rise. We are getting super close to that 3% level. Subscribers to my MEM Edge report will know that I've been tracking this as well as other metrics very closely. That 3% level in the past has caused growth stocks to stall. If you haven't already, use that link below. You can trial my twice weekly MEM Edge report for a nominal fee. I will get into that again this week. Also, a very close review of growth stocks and what's taking place there. So as we move forward, I did want to share with you, I talked about the retailers coming in not only with strong earnings, but retail sales coming in quite strong. But let's take a look. This is XRT, the S&P 500's ETF for retail stocks. This is yet another area that rallied right up to a downward trending 200-day simple moving average and then subsequently pulled back. We can see the momentum here, this MACD potentially having that crossover. We're still certainly a ways away from that, but that move into retailers as the week progressed, it did deteriorate a bit, and certainly it did pull back. Let's take a look at some of these other areas that also are finding certainly a bit of weakness for this particular week. This is IBB, the biotechnology ETF, and it was down almost 4%. Most unfortunate, because this is yet another area where we had that nice break up above that 200-day simple moving average. It has pulled back. Our momentum just showing signs of potentially shifting. This is a riskier area similar to small caps. And ideally, you want those areas to find support to point you toward a continuation rally. Let's take a look at volatility very quickly, and not a lot taking place here, surprisingly, despite what we've seen in the market. We are at that 20 level for that volatility, still in a downtrend. So that really, you can say, is good news. Higher volatility points to higher uncertainty and oftentimes a lower price on the markets. So from here, let's go ahead and take a look at some of the stocks and areas. I talked to you about XLU and XLP, that's utilities and consumer staples. And I'm going to share with you a chart. So here we are with consumer staples, and you can see a nice push up above each of these moving averages, quite a bit different looking than a lot of what we have been looking at today, with areas moving right up to resistance and pulling back. So with the move into staples, there are two reasons for that. One is these companies are coming out with good numbers. A lot of these staples companies, they have a loyal brand base. They've been able to raise their prices and still find support from their consumers. So let's take a look at a couple of stocks in the staples space. I'll share with you some other dynamics that are helping push these stocks a bit higher. This is Kellogg. You can see it's finding support at this upward trending 10-day simple moving average. They came out with their earnings earlier this month, 12% above estimates. And we can also note, I'm going to pull up this full quote and share with you how you can view whether the stock and what yield they are offering. That's another attractiveness for these staples names. Most of them have nice yields. Kellogg is not is among them, of course, nice 3% yielder. And here we are in a nice uptrend, certainly relative to, again, some of these other areas. I'll share with you a couple more names here, and then one stock that is due to report next week. This is General Mills, GIS, and a nice 2.8% yielder. We can see in a nice confirmed uptrend, it had this base breakout back here, pulled back, and then also your dynamics aren't overly in an uptrend, but certainly relative to the broader markets, we're seeing nice upside price action there. And really, you can drill down into this group and you'll see any number of names that are exhibiting this bullish price action. Here we are with Hershey, SHY, estimates being revised upward for this year. They did show 22% year-over-year growth above estimates, a nice 1.8% yielder. Nice uptrend here on the MACD, trending upward. So very good price action. And again, other names as well that are looking quite compelling. Let's go ahead from here and move over to the utility sector. And you can see this is really having a nice uptrending phase here. Actually, before I do that, I do want to give you a little bit in the way of a comparison, and we can take a look at technology XLK rallying right up to this 200-day and then faltering, a potential negative crossover here on that MACD. And that really does drive home the fact that utilities really have been strong of late. This is another area where they do offer nice yields, but also they've been able to pass increased cost on to their customer base. And we can see this nice uptrend taking place here. From here, I'll share a couple of stocks in this group that are best of breed, that are really performing quite well. This is Duke. I'm going to go ahead and pull up that 5-day simple moving average, very helpful when your stock really gets into an uptrending phase. So here we are, that blue 5-day simple moving average. And the stock is poised. Actually, we're very super close to that 114 base breakout. I will tell you, having done a lot of work, certainly in the past, let's take a look at another utility name here. This is Southern SO. I'm going to pull up, and hopefully this weekly will capture it, or maybe a monthly. I wanted to show you that there have been areas in the past of great outperformance, certainly during this 2019 period. And this is where I got really dug deep into these utility names, got very familiar with the various companies, and it has served me well during this current period because the names that are outperforming are those that have vibrant alternative energy. They're putting capital toward alternative energy sources of energy, electricity and otherwise. So Southern is among them. Duke is another. And then one last name we can take a quick look at is Dominion. And you can see this nice uptrend taking place, certainly relative to the broader markets. Duke has that 3.5% yield, Dominion 3.1%, and Southern 3.4%. So you are seeing in a rising interest rate environment, these higher yielding stocks will come into play. So from here, another area that I wanted to or stock talk about, and I did mention this, this is a name that Warren Buffett did put in a request, I believe, I'm not sure of the proper terminology there, but to purchase 50%, to become a 50% owner of Occidental. And you can see the big move here. He already had been adding to his position all along during this uptrending period. Occidental was a big winner with my MEM Edge report. It was one of 3 stocks that we added back here in the beginning of January when energy first turned bullish, and the company has proven itself to be a real grower, very high cash flow metrics, which has allowed them to increase their yield. Let's go ahead and pull up that full quote, and I will provide you with what the current yield is at this point. Actually, it's not showing very high, so not quite sure. I'm sure that number is correct, but more to the point relating to this chart, I'll go ahead and mark this up and share with you some of the dynamics that are really taking place subsequent to today's news. Oftentimes, I talk about these base breakouts, and you want to see them occur on big volume. That volume is going to oftentimes indicate further upside price action. So here we are with this base breakout potential. We're about a point or two away. And then that super high volume outside momentum indicators up there in positive territory. And I want to point out to you these other earlier periods. And this was all about Buffett's initial interest and purchase of the shares of OXY, and you can see that the high volume did precede further upside price action. Your outside momentum indicators are positive. So in turn, we did see a nice move into energy stocks. Let's just take a quick look at the ETF for the S&P 500 energy sector. And you can see not overly significant, but we are above resistance. Not every sector is in this particular position. And among there, we did see other energy stocks really come on quite strongly this week. Devon is one of them. You can see it was one of those early gainers up above each of these moving averages, trending higher. So a lot taking place. I did share with you the price of oil. Let's go ahead and take a closer look, because this is another area where certain numbers really ring true for investors. And in this case, we're looking at Brent crude oil. We're now at about that 96.5. That $100 price per barrel seems to be a real trigger for investors coming back into energy stocks. So we'll see if we continue to trend higher from here with the energy ETF. So let's take a look at some other areas that are on the move, because we did get earnings from several significant retailers last week. So I'm going to share with you just what did occur and what to potentially be on the lookout for. Here we are with Walmart. They did come out with numbers better than expected. Gap up, huge earning. And so we can see, huge volume here. And what we can see is into the close for the week, we are slipping below that 200-day simple moving average. We simply need to go over here, and it states that the 200-day is at 137.4, and we closed at 137 even. So we are slipping a bit below. The volume pretty light, but we are going to want to keep an eye on that. If we cannot retain a presence above this 200-day simple moving average, look for Walmart to potentially pull back even further. So we'll keep a close eye on that because it is such a bellwether name among these retailers. We did have Home Depot and Lowe's come out. We can see the nice positive response to Home Depot's numbers, nice big volume, but an inability to break above this barrier, if you will, this 200-day simple moving average. So that certainly is of note. Lowe's did break above that 200, but in line with Walmart, has closed the week below. So we're seeing this resistance that is continuing to crop up among many growth stocks, and it is worth noting and keeping a close eye on. There is another stock that's in those larger big box retailers, and that's Costco, and they've been able to break above that 200-day simple moving average. They're not due with their earnings until, I believe, early next month. But we can see it's finding support at these upward trending moving averages and really a very different look. So again, important to keep an eye on those big bellwether names to give you a sense of how the overall group is potentially holding in or not. One last area I'm going to share with you, and let's take a look at some of these ETFs. So first up, we are going to take a look at QQQ, and that is the Nasdaq, the ETF for the Nasdaq, and we can see that it did not quite make it to that 200-day simple moving average. Pulling back a bit here, we are seeing the MACD with that black line crossover. Very simply, it can indicate that this upside momentum has shifted. We got pretty big volume on today's 2% pullback. So we look for this potential momentum to shift. We can see up here the RSI still in positive territory, but trending lower. So from here, I'm going to share with you a view of an inverse ETF, but it is to give you a sense of how important it is to tread lightly, because here we are with QID. This is the ultra short with the Nasdaq, and we can see it's broken up above this 10-day moving average. We have this nice MACD crossover, so very attractive looking at first glance, but you do want to be aware that you can have these dips into positive territory. This is taking us to the end of July when we had that pullback in the markets, and however, when it does fail, if I may, this particular day, the QID was down over 12%. So again, using history as your guide, that's always going to be helpful. I'm going to take a moment here and mark this QID up because there are people that are keeping a close eye on these ultra short inverse ETFs. So let's go back to a period when QID worked. And this is taking us back to that beginning of April period, and I shared with you the Nasdaq failing. I'll share with you again in just a moment. But here we are with that MACD momentum shift crossover that took place during this period. But eventually we are going to be, you would be, on the lookout for a break above these moving averages, RSI and MACD now in positive territory for a continuation. Now, of course, you are always going to pay attention to the QQQ because this is the opposite of that, but from a technical perspective for this chart. So here we are at this juncture, we are getting that MACD crossover. We did see a break above the 10-day. So once we get conceivably up above more in the way of these barriers, this is your 200, your 21-day, you can get a sense that there could be further upside. You'll want to see that RSI get into positive territory. But of course, most importantly is how is the Nasdaq doing? So let's just take a quick look here at this. I'm just taking us back to this period when I shared with you that QID turned positive. So that's where we are right now. Guys, I hope you have a wonderful weekend, and I am going to look for you here again next week. Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.